Good afternoon. It's Tuesday, 3 p.m. 3 p.m. past 1 minute. All right, we're here today, and we have an interesting topic. Not very traditional, but it is a conversation happens quite frequently the last 2 weeks. So we want to bring some knowledge to you and talk about this very sensitive subject. What if the bank fails, right? So that related to FDIC insurance. How many times you uttered that word this last 2 weeks? Lots of our clients is calling and wanting to make sure the bank they work with is FDIC insured. When you ask why, they're saying, well, these banks, Silicon Valley banks went belly up, and so things are not looking great. First of all, the banking system is a huge system. The government has its hands on it. So it will not come to the point like it just bankrupt, it just gone. It's not possible, folks. But there will be banks that cannot operate. They bankrupt, but that is not because of whatever happens going on here, right? The banks can go bankruptcy anytime they want it. And if they don't get managed really well, they fail. So when they fail, if they are FDIC insured bank, there will be procedures to go through. And the people who bank with them might lose some money, might lose all of the money, but as long as you have that insurance, you at least get some back. So let's go ahead to see what we have today in this 30 minutes. Prior to that, I'd like to show you about our website, which you are looking at that right now, I believe. Am I right? Let me make sure you are. So you're looking at our website. And this is our website. You can make appointment with me here. I have this book called Appointment with Ying at 8 a.m., right? But don't book 8 a.m. and book another time that is available over here. You can come to appointment and find me right here. So Ying Sa, CEO and managing partner. And this is where I want to just kind of explain to you that I established Community CPA back in 1998. So I think to put that title on me is not too bad idea. And I have earned my title, and Community CPA is doing great. We have more than 10,000 clients. We have more than 3 branches, and we're still growing. So if you want to kind of get involved with companies and businesses that are also growing, to just take advantage of that, what do you call that vibes, like in the business, then you come to Community CPA, all right? And we have a YouTube channel where we put all of our talks here on YouTube after fact. So if you couldn't make it 3 p.m., you make it onto YouTube when you have time. And I'll tell you that a lot of time, the phone call I got, I tell my client that go to listen to the YouTube first. Once you heard that and you come to ask us questions, then we can start at a little higher level than just very basic. Because basically, the more you know before you ask questions, the deeper we can go and we can give you better solutions, knowing that you also know a lot of stuff already. So now let's go start our webinar. And let me see where I need to go to share screen with you. Now, FDIC Insurance by Ying Community CPA. And speaker information, I already touched on it. That's my first book, Appointment with Ying at 8 a.m. You can get on Amazon, and I also have copies in the office that you like to purchase. And I just finished the second book called 10 a.m. I'm not sure cover can look exactly like that, but it is a book of following the 8 a.m., 10 a.m. So I am writing the 2 p.m. and the 6 p.m., just as you know. No responsibility disclaimer, as usual, and make sure that if you really need us, you know to retain us. Be your backup, okay? We're good at doing that. And the basics about FDIC insurance. Now let's get to the real topics, right? So FDIC stands for Federal Deposit Insurance Corporation. Okay, don't get alarmed. It's not a privately held corporation. It's an independent agency of United States of government. It provides the bank depositor against the losses of their insured deposit if the FDIC insured bank or saving associate fails. You see? So the conditions are following. The basic condition is that the bank you're putting your money in, they have to be FDIC insured banks or institution or brokerage firms. Whatever they are, they have to be FDIC insured. So that's bottom number one. And then when you deposit into the bank account, and you will get the insurance coverage automatically. So here we say that the standard insurance amount is $250,000 per depositor and per insured bank. So if you deposit, if let's say you single and you have a saving account in Wells Fargo, then you have another saving account at the U.S. Bank. And the one saving account is $250,000, the other saving account is $250,000, then both are maximizedly insured. So, you can deposit in different places to get that $250,000. It's per insured bank. So that means you don't have any limitation. You can just go on to deposit your money in all kind of banks, right? And you do not need to purchase it. It's automatically there for you. And the deposit, like the deposit you put in the bank, if you have $250,000 deposit, and the Silicon Valley Bank just happened to fail right now, recently, and if you have that deposit, you will get that full amount back. So you may say that, well, they closed. How do I get it back? Just like when you burn down your house and, the insurance company issue you a check. So same thing. So the FDIC insurance, that Federal Deposit Insurance Corporation will write you a check for it. So example here is if a customer had a CD account in her name alone, just her name, with a principal balance of $190,000, $3,000 on the interest income. So there the total is what? $198,000. If this bank folds, and the FDIC will pay you for that $198,000. So it is per depositor, including your principal dollar to dollar, and also including your accrued interest in there. All right. So what happens when exactly, like one bank fails? What happens? What happens to me as a consumer, as a depositor? And you get to know it. You maybe discover that first on the news and, or somebody works at the bank tell you saying that we're closing. And so you know it. And when that happens, and you will need to know how many bank accounts you have. So the FDIC steps in at this time. So they operate on two roles in the bank closing. Number one, they are the insurer for the deposit, right? So they're going to make sure that every deposit account and going to get that $250,000 maximum. If they have more than $250,000, sorry, just $250,000 for now. But the FDIC also have another role. That is what we call receiver role. Receiver, in many cases, when you hear people saying that, oh, my company is under receivership. Oh, the receiver is handling everything, and we cannot touch our books and the banks anymore. Those are the private company talking. When they're getting into litigations or whatever reason, the receiver steps in, appointed by the court, and to manage the business. So the FDIC will come in to assume that receiver role. So they will sell the asset and making money out of the selling. Then they will prorate the total money they got to the one that didn't get insured, to the one that above the insurance dollar amount. So that would be like a prorata, a cents on the dollar kind of thing. So if you have, $2 million deposit, you only got $250,000 back. Oh, yes, that 1.75, they will give you a cent on the dollar when they sell the bank. If, let's say, the bank doesn't worth anything, there's nothing to sell, they owe a bunch of money on their buildings and they don't really have any asset, then you just don't get anything over and above that $250,000 deposit insurance maximum. So I know what you're going to ask me. You're going to say that, okay, Ying, you scared me, and I don't really wish to scare you. I just want you to be more knowledgeable. And really, there's nothing to scare. I'm telling you that if this whole country is going into, recession, there's no one can avoid it. You're in it. I am in it. If someone lose money, we all lose money. It's not like, just one person goes on recession, the other all on prosperity. This doesn't work that way. So there's nothing to scare. There's only preventative measures that when you know it and you know what to do. Okay? So is my bank FDIC insured? So there's a couple things you can figure it out. You call the bank, find out. You call. Okay? And you ask the bank representative and to see whether they're FDIC insured, or you look at their sign. A lot of times, there's a sign all over the place saying FDIC insured, right? And then you can also go onto this website I put down there for you. If too long, and take a snapshot of the picture of this slide, and go on there to check to see whether the bank you're dealing with is FDIC insured. You can also call that 1-877 number, and you can also submit a request to FDIC.gov. There's so many ways. You won't be in the dark, but I do ask you to know. That's all. All right? Once you know, and you may say that, Ying, I'm not worried because I don't have that much money anyway, so I'm pretty safe. Yep, that's true. If you don't have more than $250,000 in one deposit account and on your own, then there really isn't not much to worry. Just make sure your bank is FDIC insured. All right. Then I kind of want to give you a chart. This is a useful chart, and it says that the insurance coverage, the FDIC deposit insurance coverage, is covered by account ownership. So they may make you feel like, well, what do you mean by account ownership? And let me show you this. You will understand what that means. I hope you can see it pretty clearly. You see, it says that single account owned by one person is $250,000 per owner, right? And so what if you have a joint account? What if you have one account with husband and wife, both of you on it, then it's $500,000. So they are going by the owner, per owner, okay? Then, of course, down there you will see that the joint account, and then you also have certain retirement account, including RIAs, all right? IRAs that limited $250,000 deposit coverage, and revocable trust account and irrevocable trust account. There's just something new came up in 2023, and I didn't really go extensively research that, but what we have here is accurate. It is $250,000 per owner per unique beneficiary. So for example, let's say you have a living trust, and the dad left the living trust with 3 kids, okay? And you got the deposit for the 3 kids. Dad passed away. The 3 kids has the money in there. The FDIC insurer coverage is not $250,000. It's $250,000 times 3 because it says by per unique beneficiary. So this is what I kind of want you to just know that how that $250,000 works, right? Corporation, partnership. Those are the ones for $250,000 per corporation partnership. So what if in your company you have a checking account running operation and you have a payroll account running payroll, and you got such a big payroll that every time when you put in the payroll is over $1 million. So there's no way you can make that under $250,000, right? Yeah, no way. So, but when they consider 250, folks, they don't consider each account. They consider a corporation. If you have 10 accounts, they're going to add up 10 together, give you only 250,000, right? So just remember that. And maybe you need to make some switch, something. But remember, And it's not by your number of accounts. It's by depositor. It's by the entity. Okay? So make sure that you understand that. And the irrevocable trust account, the same. So it's by unique beneficiary number. Employee benefit plan account. Employee benefit plan, I mean, very small company could have it easily over 250. So if really the bank goes, fails, then my employee benefit account is with the bank, then that's a very sad thing. Because all of these savings for all the employees, everybody's retirement, everything is in there, it will be gone. But that's not new. Enron was exactly that, right? So, in this free economy world, those kind of risk is not avoidable. But does that mean we should just chop it all off and don't do it? Ying, let's not even do anything about retirement account anymore. We're just going to make it, spend it, not think about tomorrow. It is easier said than done. And really, in our lifetime, these kind of up and downs going to happen several times. And you just want to be aware. We can lose, but I want to lose with conscious decisions and knowing that it is the decision, it is what it is. But I don't want to lose without knowing or lose without feeling that I have done everything already. So it's okay to lose. And we can lose with everything we already did. There's nothing else we can do. So I lose, everyone else lose, the economy tanks, and we are going through some hard times. But we'll come through. And the United States of America is the best country you can find on the planet. And if we have a hard time, everywhere has a hard time. And we will come out of a hard time a lot faster than any other place on earth. And that's my experience. I didn't live 500 years. So I'm giving you my 50-some years experience. And I have gone through 3 countries. I lived in 3 different countries. Okay? And from communist to socialism, from socialism to capitalist. How do you think? So I have experience. And I can tell you it will recover. It just needs some work. But before it go into recession or needing to recover, and you plan. And that's why we're here, right? So what bank products are covered under FDIC? I know you want to know that. Let me tell you. Checking account is covered. Saving account is covered. Money market deposit is covered. And a CD is covered, folks, okay? So you can go to some banks, buy a CD. That's covered. And a prepaid card is covered. I know not a lot of people using prepaid card in my group of clients, but I know prepaid card is very much used in certain industries. So, with those prepaid card, like trucking industry use a lot of prepaid card. Cashier checks, money orders, and other financial items issued by a bank. That is covered. All right? All right. So what product is not covered? Let's look. And mutual funds, not covered. You lose, you lose. That's what happens on the market. Stock market is wild. I mean, don't lose money on the stock market. If you just don't know how to play it, and just play conservative, folks. The saddest story I have is a retired couple, and a gentleman lost $3 million, all of the retirement saving, and he doesn't even know how to talk to his wife about it, and not good. And I'm sad when I have situation happen to my client like that. Life insurance policy is not covered. If you buy a life insurance with a company, they're going to go belly up. Too bad. You lose it all. That is why when I recommend life insurance to folks, and I really care about the life insurance company's history, how long they are on the market, what they are doing today, and to really putting your lifetime on it, because you're not buying life insurance today with discount, and you're going to, that life insurance company going to carry that for you for the next 80 years. You think they're going to be there for you? And it just really don't think of a discount today means anything, nothing. Bond investment, cryptocurrency, and municipal securities, and a safe deposit box, and that content. All right? It's not safe. If bank fails, that's not guaranteed you get it. Okay? And the U.S. Treasury bill and the bonds and notes, I want to make a note here, and they also sell by the bank. But they are not part of the FDIC insurance. They are guaranteed by the government. So, but these investments backed by full faith and credit of the U.S. government. So when you buy municipal bonds, and it's governed by the city and by the government. I mean, do they go bankruptcy? Well, their big city went bankruptcy, right? So it's not like not heard of, but hopefully our government have that credit, so we cannot fail the loan to pay to other country. And I don't care how many of the folks out there don't like China, but if we owe debts to China, we need to pay. It's just like we owe money to Wells Fargo, we need to pay. So the government should not go bankrupt. The government cannot default on the loan. I don't care what party is playing politics. It's just disgusting when that even talked about at the White House. Just disgusting. And our government is talking about defaulting loans. Yeah, I'm about to puke when I hear that. Best practice for our small business owners, folks. Review bank balance and make sure that you are under $250K. With your bank, okay? And so that's the way to protect yourself. Pay down the loan. If you have excess cash, why? Hold it and just pay down the loan. So that way, at least you don't end up losing the money and you still have the loan. And don't imagine that the bank went bankrupt, so your loan is also gone. You can dream about that. Loan will be bought by other banks, continue collecting on you, okay? Invest in other areas. So at Community CPA, we talk to our client about wealth mix. So we're talking about how to mix your money so that you'll be relatively safe in the long run. 5 items. Property, you need to buy property. You need to buy life insurance. You need to buy retirement funds. You need to invest in the stock market smartly. You also need to buy precious metals. Those are the 5 wealth mix we tell our client. So some people put all their money in the stock market, they lose it all. Some people buying too much life insurance, no, not worth it. You don't want to do that because your average gain, your average interest rate on those money you put in is only like 2%. You could have put that money into a CD and making more, right? You're not going to die any moment. So, there's just considerations on everything. Properties too. If you buy it right, you make money. You buy it wrong, you put more money in there and then drain up all your cash. So everything has a balance. Everything has a way that to make you comfortable and do not stretch. I never really, I used to really believe that to save $3 for the lifetime, I would make a $3 million. At age 50, no. I am saying that if I want to spend $3 for Starbucks coffee, now it's $5. So I'll do it. I'm not going to save it. But if you say that, okay, let's put all the money in one place and, this bank is shaky, then I'm not doing that. I watch what I do and I plan what I do properly. All right. So my last 2 slides. And can I have more than $250 deposit insurance coverage at one FDIC bank? The answer is yes, because if you have a company bank account there, then you also have your couple bank account there. So your FDIC total insurance would be $750, right? Because $250 for you and your wife, and then the company is $250. And even if your company has 10 other accounts, too bad, so sad you only have $250. Okay, so then I give an example of that revocable trust, like a living trust. If dad passed away, left money for three beneficiaries, then that money is insured by $250 each. So maybe dad's estate is only $750. Then that means none of the children will lose the money because it will be insured by FDIC. All right. Can I check to see if my accounts are fully covered? So, of course you can, right? You want to make sure that, remember the slides I gave you? You can call the bank. You can literally ask the banker that question. I'll tell you today, when you ask that question, and it is really, it is going to be a smooth answer because they have got a lot of questions on that lately. But I'm not trying to say that you should be running to the bank and taking all your deposit. If we all do that, it will destroy our economy. So we want to remain calm and plan and see what you can do with your bank. And there is a update on the April 24th, and I really did not study that in full length. This is a revocable and irrevocable trust rule change effective April 1st, 2024. So it is still 2024. I'm still in 2023. So I'll just leave these slides with you and we will come back to visit that. But at this point, I want to conclude my presentation with you. And you got my message. You know what I'm trying to do here. And you can always email Catherine at communitycpa.com and she will take your suggestion, turn that into my talking point. And I am such a normal human, just like you. And I do things based on how I sense the surrounding. And for small business owners, a lot of times we are lacking of information. And you may be too busy working. You didn't even check on the news. Or you may be just not understanding what Silicon Valley Bank fails has impact on what. That, you can just simply imagine the very simple scenarios that, if you are a pizza shop, you only buy spaghetti sauce from one place and this place went belly up. And then what do? And you are wondering how much I paid you. I didn't get back. I didn't get any food. And you're probably also wondering where to find another place to buy spaghetti sauce, right? So that chain reaction in economy can be simply explained by a pizza shop needing spaghetti sauce. So when the spaghetti sauce is getting dried out, then the pizza shop is not doing good. When pizza shop is not doing good, people have no place to eat pizza. And then that will impact the children of 5 years old. And from the person who making the spaghetti sauce, who are in their 50s, have a full-blown career. They know what they're doing, but they fail, right? So with that thought, and don't look away of big news. Big news give you small senses. And don't look away from Community CPA's webinar. We really are the gatekeeper for our small business owners because I know what you know. And I know how much you need to know to make the right decision. So join our webinar and listen to what we are saying because that we are reflecting the economy. We are reflecting today's state. We are reflecting the big environment. And we give you guidelines and we also have a good heart and we care about this country. We care about this government, and we know politicians are giving their life to their career, to the better of the country, but not all politicians are honest and respectful men. They are just people deceiving and cheating. And we cannot have people like that in the system, and we need the news to tell us what's going on. We need to make our own judgment. And I am making a lot of those judgments to assist the small business to grow, to sustain, to survive, to thrive, so we can see you tomorrow.